This is the PKF Texas Entrepreneurs Playbook. I'm Jen Lemansky, and I'm back once again with Chris Hatten, one of our approachable advisors and the head of our Transaction Advisory Services group. Chris, welcome back to the Playbook.
Always a pleasure, Jen.
So, we always talk about buyers and sellers, businesses, transactions, etc. And the goal for the seller, I would think, pretty much all the time is to get the absolute most for their business.
That's usually the goal.
The biggest number. So what are some ways or easy things that, a seller can do to maximize the value of their business?
That's key. Obviously, you want to be able to take home as much as you can. And then some of that is being ready for the transaction, but then things you have to do throughout that transaction to make sure that that number doesn't continue to go down. One of the easiest ways, and this is kind of like a no-duh statement, but is to have strong financial statements. Mm-hmm. And what I mean by that is that you should be outpacing your competition, performing a lot better than they are. The numbers show, and one of the groups that sometimes we cite data from is a company called GF Data, is that if you have what they've termed strong financial statements, is that your multiple can be 25% higher than your competition. Mm-hmm. And so just think of, let's say, going into a transaction, you have, they're going to offer you a multiple of 7, and let's say it's based off of EBITDA. 25% on top of that is an 8.7 multiple. Mm-hmm. So if you multiply that just by $10 million for a sale, that's almost an extra $2 million in your pocket as part of it. We're just talking round numbers. Another part of having strong financial statements would be being able to show year-over-year growth. They don't want to just see that the company is holding serve from one year to the next. They want to see that, obviously, mm-hmm. an uptick in that. Something else that is helpful is they want to be able to see that there's still some, what I call, meat on the bone. If you've exploited all the different markets, all your different channels and that kind of stuff, they're probably not going to see as much upside in that. Mm-hmm. So as part of that, you want to be able to, one is you got to be able to show them as well as articulate this to them. And so, you might be able, as part of the conversation with them, is if you've been selling in a certain geographic region, let's say it's primarily Texas, is this something that you can push out to the surrounding states or even the United States, mm-hmm. or have you tapped the international markets? So being able to show that is going to sit there and help create value, mm-hmm. for potential buyer to then come in and help execute on. And these are type of things that you've hopefully had in the hopper already,
right? And
not just something that you're pulling out of thin air to sit there and try and get them across the finish line. And if you have, it's going to be easier to talk to these people about the possible transactions, mm-hmm. and that kind of stuff. So, expanding into markets is one. New service lines is another one. Something else that you want to be able to address is any concentrations. We've talked about how customer concentrations can be an issue. Mm-hmm. And so you want to be able to talk around that and address it. And so, you want to be able to show that your product is the reason that the vendors are coming to you is that you have the best product. It's not the relationship with the owner. And so then also potentially showing that they've been a customer for 20 years and that obviously they're not going to just jump ship because there's a sale.
Yeah.
Exactly. And then also, we've talked about this previously is, as an owner, you want to sit there and make sure that business, that you aren't the business, you're
right. You've delegated things down.
Yeah, exactly.
Yeah.
We've talked about this previously, having the right team of folks, mm-hmm. as part of a transaction is going to be crucial. In a previous video, we've talked about, needing to have an investment bank represent you, just because that's what they do in and day out. They're going to be able to help you identify that right mix.
Yeah.
We talked about maximizing value, but sometimes that's not the end all be all. Mm-hmm. We talked about culture and making sure, a lot of times these people have been with the company for 20 and 30 years. And so they want to make sure that they're taken care of after the sale and that they're just going to not come in and start, lopping heads, that kind of stuff. So we've talked about the CPA, the tax aspect of it, as well as the transactional attorneys.
Mm-hmm.
And so these are the folks, they're going to make sure that you're not paying any more than you need to as far as taxes, the deal is being structured correctly, and that what you've agreed to in principle is still there. Those are going to kind of help you retain value as well. One thing that, I hate to be a little bit self-serving but a sell-side QOB.
Yeah.
We can work with the seller prior to going into a transaction and hopefully, identify some of these potential, what we call speed bumps that are going to slow down the transaction. And then that way, when it comes time to actually go through a process with the investment banker, business broker, there's going to be speed to close because we've already ironed out some of these potential issues, identified the concentrations that could be there, and us working with these other advisors, we're able to kind of help with that language around these potential issues.
Perfect. Well, sounds great. We'll get you back to talk about some more transaction-related things. Sound good?
We can do that.
All right. This has been another Thought Leader production brought to you by PKF Texas, the Entrepreneur's Playbook. For more information about this and other topics, visit pkftexas.com/insights. Tune in next week for another chapter.